All right, now for our first conversation. Well, the year 2022 is already shaping up to be quite interesting, with advanced economies experiencing a rise in inflation not seen in many years. Back here, Afrinvest recently released a report titled A Mix of Bloom and Gloom, a review of Nigeria's macroeconomic performance and outlook. Let's dive deeper into this report with Damilare Ashimiu, macro strategist, Afrinvest Securities Limited. Great to have you on the program. Good morning.
Thank you, Laddie. Thanks for having me on the show.
Yeah, so you got your report today, the macroeconomic review for 2021, outlook for 2022. Quite an interesting theme there, a mix of bloom and gloom. What are the key highlights of this report?
Yeah, so on the global space, the report highlighted how the global economy rebounded in 2021 from the pandemic-induced contraction in the prior year. It also dimensioned how large stimulus rollout in advanced economies complemented the increased vaccination rates there, because currently now we have a lot of advanced economies having more than 50% of their population vaccinated. So the combination of the stimulus package, both monetary and fiscal stimulus, as well as the large-scale rollout of vaccination, propped up demand in advanced economies. And this also was to the benefit of a lot of emerging markets, especially the oil producers. We saw that in 2021, global trade rebounded strongly from the contraction of about 5.4% in 2019 to about 10.8% given IMF estimates. And also we saw that oil prices touched a 7-year high. Last year, it came from an average of $44 per barrel in 2019 to hitting above $70 last year. And also, we also reported that there was increased adoption of technology last year. We saw that the pandemic has driven a lot of business activities to leveraging digitization. And also, world leaders now are also putting more effort towards ensuring that decarbonization is also achieved going forward. And on the domestic scene, we saw the Nigerian economy in the first 9 months of the year rebounding by about 3.2% in real term, which completely offset the contraction of 1.9% that was recorded in 2020 as a result of the pandemic. Largely, this was fueled by the non-oil sector, which grew on average by 4.3%. And it is worthy of mentioning that services sector was the brightest spot in the economy last year, growing on average of about 5.8% over the first 3 quarters. We also strongly believe that though there was a little shivering impact from due to the emergence of the Omicron variant of the pandemic in Q4, we believe that the economy will still turn in a positive regrowth in Q4, which by our own estimate, we think will bring the GDP growth for 2021 to about 2.7%, which arguably will be the fastest or the highest since 2015.
Quite interesting. Well, I'll be looking out for that. About mix of boom and gloom, how does this describe the Nigerian economic prospect in 2022?
Yeah, so the outlook team is actually to shape the minds of Nigeria on what the expectation for 2022 is. There are a lot of events that we expect to take place this year that will catalyze the growth of the economy. We believe if each of these events are well managed, we see growth this year coming in at about 2.9%, which means it's going to be stronger than 2021. First, we see the non-oil sector sustaining consolidating on its strong performance in 2021. Especially, we see the services sector leading in that area. Our focus key sectors that will actually lead the performance include ICT. We think that the recent granting of payment service bank license to 2 of Nigeria's the telco giants will fuel increased investment there. We also believe that the passage of the PIA, the former PIB, which is now Petroleum Industry Act, will favor attraction of new investment to the oil and gas sector because this sector performed very dismal in 2021. As a matter of fact, throughout the 3 quarters of 2021 that we have seen GDP numbers, the oil sector was below the waters. So we think a combination of base year effect and a renewed interest of investors in the Nigerian oil and gas segment due to the passage of the PIA will help to fuel a rebound. We also think that the CBN will sustain some of its policy intervention. We saw the CBN late last year coming up with an 100 for 100 policy to support 100 companies every quarter that will go into production of items that will help boost domestic supply as well as attract FX. So we think that all these policies provide a good comfort on what we should expect. We also believe that the coming on stream of the Dangote refinery by H2 of this year will help reduce the pressure on Nigeria's external balance, because as of 6 months of 2021, Nigeria balance current account was in deficit of about 2.5 billion, and that was largely due to the fact that we had a negative trade position. On average, annually, we spend between 15 and 20% of our commodity import exposure of FX. We spend it on importing refined oil as well as lubricants. So with Dangote refinery coming on stream, we believe this will, from H2, we believe this could mark the beginning of Nigeria's current account returning to a positive position. However, the gloom part of the outlooks could be linked to our concern on the high level of insecurity in the country. There's no gainsaying the fact that high insecurity has actually hit manufacturing and the agriculture sector the most throughout 2021. In the first 3 months, 3 quarters of 2021, pardon me, agri sector growth averaged about 1.6%, which is far below the historic potential of about 3.5%, except for Q1 when growth was above 2%. The other quarters, agriculture growth settled below 2%, so which reflects largely the impact of high insecurity that is taking place in most of Nigeria agrarian belt, and this also directly impacted manufacturers too. We saw that the performance of that sector was also not strong enough, of course, because the agricultural sector provided a lot of raw materials for this player. So we think with insecurity still in play, the capacity of the economy to deliver optimally in 2022 might be hindered. We also think that the continued apathy of foreign investors for Nigerian assets may likely taper down our growth potential, because as of H1 this year, foreign capital flow to Nigeria fell further. 2019 was our peak year of attracting FPIs. We attracted almost $24 billion. In 2020, years due to pandemic, we attracted less than 10 billion. But as of 9 months of this year, Nigeria have only been able to attract just 4.5 billion foreign capital flow, which is less than what we get in a quarter in 2019. So we think the concern around the Nigerian exchange rate policy may continue to keep foreign investors outside of the country, and this will not really go down well with the exchange rate. So these are the things that we think could fuel the gloomy outlook, plus political dynamics, given the fact that 2022 is a pre-election year.
Right. That's quite concerning, looking at the foreign direct investment there. But analysts have expressed divergent views on the 2022 budget. What, in your view, are the likely impediments to actualization of the budget?
The truth is that the 2022 budget is actually not very big. If we are to look at it holistically, Nigeria has a population of over 200 million. The budget is 17.1 trillion in naira. In dollar terms, that's just about 41 billion. If you do that as budget per capita, what you get is that the budget for each Nigeria in 2022 is just barely above 107,000. So it means the federal government budget for you or for me is just 107,000 in a year. However, the problem with the budget has to do with legacy problem, the inability of the government to generate revenue on one part, and also the distribution of the budget itself. It's quite interesting that recurrent expenditure accounted for about 40% of this budget we're talking about, while debt service will go up about 22.7%, statutory will take about 5.2%. So what is left to drive the capital expenditure is just about 32%. And this is what needs to be scaled up so that growth in Nigeria will be sustainable, so that we'll be able to create more growth. So basically, we have structural problems that may likely affect the performance of the budget, especially as regards to how well our revenue target, because the best we've done before 2021 was 4.9 in 2019. As of 11 months 2021, we've actually done 5.5. But we think the best that will come will be about 6 trillion. So government aiming at achieving 10.7 trillion revenue may not be achievable, which will widen the deficit gap and also impact on our borrowing. And also, we feel that some of the assumptions of the budget look quite a bit optimistic. Yes, the oil price benchmark of $62 per barrel looks very decent given the dynamics in the global oil market. But in terms of the GDP growth projection of about 4.2%, we think it's a bit optimistic given concerns that we've mentioned earlier, the insecurity, the exchange rate concern, and the weak capital flow into the country. But we think that if Nigeria could put its house in order and we put politics aside and allow the economy to be managed properly, we could see growth surpassing 3% in 2022. So basically, the hindrance just has to do with things that could be dealt with if right policies are put in shape, and if government also think realistically in terms of its revenue projection.
Okay, maybe starve the recurrent expenditure a little there. But, you know, the Monetary Policy Committee of CBN would have its first policy meeting for 2022 next week, Monday. What is, you know, Afrinvest expectation on monetary policy direction for 2022, and what are the factors you actually considered?
Yes, from our perspective, we think that the CBN will actually hold policy rates unchanged, especially in the first start of the year. And the reason being that Nigeria is actually, in the middle of a difficult situation. Yes, there has been increasing hawkish tone in advanced economies, but most of these global systemic central bank have actually not started implementing the raising of interest rates. So what we've seen so far is scaling down the level of stimulus in the country. So, and given the fact that Nigeria growth is quite still fragile, yes, we're expecting the growth to be about 2.7 this year. But if you net off the effect of the contraction in 2020, the real growth for 2021 will just be about 0.7%. So the central bank will not do any good for the economy now, increasing rates. If we're talking in terms of raising monetary policy, because it will raise the cost of borrowing for businesses, and this will also have negative effect on employment creation capacity. And if you look at our unemployment numbers at above 33%, that's not quite decent. So we think that also the current level of the reserve provides some level of comfort for the CBN, at least to keep the exchange rate decent for the first half of the year, because we believe that the global systemic central bank will not become aggressive with their tightening agenda until middle of the year. So we don't think the CBN want to go ahead of this other systemic central bank. They want to play in tandem with them. They want to take the necessary step or implement the necessary policy action towards H2 and not in H1.
All right, so very quickly, what's your expectation, performance for the equities market this year? We've seen it's having a rally right now.
Yeah, so last year, the equity market actually missed our projection by just 10 basis points. We projected that the equity market would deliver 6%. It did 6.1. So for 2022, we believe that with the right mix of good environment for businesses to try, we think the market at base case will deliver about 7.3% in return. And in a best case, when we have favorable policies as well as decent catalyst report from the government, as well as the reduction in COVID-19 distress, we think that the equities market could also go all the way to deliver about 13% at best case.
Okay, and just one more question now. Global inflation on the rise right now. As an investor, how do I beat global inflation? Yeah,
so one thing is to invest in assets that can actually outperform what the inflation is. What I mean is that strategic investment is key at this point. You have to understand the dynamics of the economy where you want to invest. What is the current inflation rate there? What is the strength of the currency in a country or in an economy where the country is highly subjected to quick currency devaluation? It will be very good for investor there to have their portfolio to be diversified, a mix of equities and fixed income. This is where professionals are needed, professional advice are needed, because there are actually some sectors of the economy you can invest in their stocks, and these sectors on average will outperform the economy come rain, come shine. So a mix of a balance of a portfolio mix would deliver excellent performance for anyone in 2022.
All right, I guess we have to all gather and beat inflation right now as investors, because it's not looking pretty cute there. So, Damilare Ashimiu, thank you so much. Macro strategist, Afrinvest Securities Limited. Thank you for coming on the program.
Thanks for having me.